What's up, traders? Andrew O'Connell here with Pristine Capital. Welcome to your market recap video. It is September 26th of 2022. What another wild day in the market. Today was day 28 of the sell-off. I would imagine if you're watching this video and you've been long the market, you're probably pretty demoralized at this point. Again, we're on day 28 of the sell-off. I'm sure you're wondering, when is the market ever going to turn? Those people on FinTwit are right. The market's never going to go up again. Well, we're actually getting some better action in the after hours, so hopefully we get some relief tomorrow. But for now, let's dive into these box scores and assess what happened in today's market. S&P 500, it finished down 0.99% for the session. Our NASDAQ QQQ was only down 0.41%. That is a positive divergence. IWM small caps were down 1.37%. Dogs of the Dow were down 1.06%. ARK was also down an identical 1.06%. Pretty much all these indices, they closed towards the lower end of their day's range, right? Pretty ugly. We had a nice bounce in the morning. That bounce was sold into. And we went back and forth for a little bit throughout the session. Then that selling really gave way towards the end of the day. Volatility across all these indices once again expanded. And for a while, the VIX and all these other vol indices, they were just kind of like very tightly wound. They wouldn't really move. It's kind of crazy. Now the glue has come undone. Now they're really starting to move. And then you can see for breadth, very weak. We only had 24% advancers in the small caps. We had 11.9% up volume on the day. The trend model remains at a -3. Economic data. This is heading into tomorrow's session. We have just a litany of Fed speakers. See, we have Evans at 6:15 a.m. Geez. Then we have Bullard at 9:55 a.m. and then we have Daly at 8:35 p.m. Geez, are these times off? I'm not sure, but no, these actually look good. Durable goods orders are going to come out at 8:30 a.m. Remember, good news has been bad news and bad news has been good news. So if we get durable goods orders, they come in a little bit lower than expected, perhaps that could be good for bond yields, or maybe those bond yields start coming in a little bit. At this point, the 10-year Treasury yield, it's at 3.9%. 30-year yield is obviously even higher. And it's very odd. I mean, if the economy is really going to slow down, you would expect that the 10-year Treasury yield would start to come in at some point, and we're going to get some housing data as well at 9 o'clock a.m. VIX futures curve. We are still in gradation here. So you can see that this arrow is slanting down. Futures contract trading above these other months. That's still in the middle of a panic event in the market. Speaking of panic event, the advanced decline line on a 10-day basis had its worst sequence in 32 years. 32 years is a long time, right? We talked about this at length in our weekend market analysis video, that there was record put and bearish options buying on most in 30 years. We're seeing this same thing on this advanced decline line. Finviz heat map was also, not really so great. Red across the board. Energy is leading us to the downside, which is a good thing. And some of these FANGs, they are really the outperformers today. Costco also up almost 3% on the session. Sectors. Consumer staples are at the top of our list. KWEB was up 1.89%. We did have some China reopening news that's going to very positively impact LVS, which is Las Vegas Sands, also Wynn Resorts. The EMQQ, Emerging Markets, Internet, and E-commerce, that was also positive. Now you would think with the dollar so strong, how is China trading up? How is emerging markets trading up? That is another positive divergence right there. But overall, the selling and the capitulation continued. Style factors. Another divergence here. Growth stocks, or our best performing style factor, only down 0.67%. High beta was also on a relative basis not so bad performance wise. The worst performance was this high div low vol group, which was down 2.01%. In terms of trades, only trade that we took was we got long these UUP, which is the dollar index, the December 16th 30 strike puts for 48 cents. One of the members of our trading community actually raised this, as a potential trade idea. He took the October puts, I believe, and I decided to just go a little bit further out on the expiry went out to December. Reason why is because UUP, the dollar index ETF, it is trading at its 3 standard deviation Bollinger Band away from the 20-day simple. Whoa! S&P 500, nice move in the after hours. It's not bad. S&P 500, it's up 0.76%. Let's go. So yeah, sometimes this happens when you're in a bearish sequence. Like it just seems like, oh my gosh, market's closing on the lows. This is awful. And I think if you're on like day one of the sell-off, like closing on the lows, oh my gosh, what a bad thing. Like downside to come. But like when the market has just been getting ripped for 28 sessions, that doesn't really mean the same thing. There's a lot of like heuristics in trading that I just don't even think are accurate. Like, oh yeah, weak close means the next day is bad, or sometimes those things it's just like you don't even know what the next day is gonna bring. S&P 500 right now, we are gapping higher in the after hours. So this is good. It basically took us an entire day to work off that last bit of downside in the S&P 500. And you can see I thought this was odd during the session. We undercut Friday's lows, but we did not make any further downward progress once we got to that level. And now just in a few short hours, all of a sudden we're just, bursting all the way up to pretty much, we're almost at the day's open from earlier in the session. So not bad. And I'm assuming that's coming on dollar weakness. Let's just check that out. So this is definitely a pleasant surprise. Yeah, sure enough, dollar index hits 3 standard deviations overbought. That's when everyone thinks the dollar's never going to go down again in our lifetimes. And yeah, seeing some nice weakness in the after hours. Can't take it for granted. Maybe we wake up tomorrow and it's a totally different story. But for right now, I'm going to take this small win. NASDAQ. Let's see what we had for today. This was the big divergence team. So the NASDAQ was barely down, even though the S&P 500 was pretty weak. Like you can see the NASDAQ didn't even test Friday's lows. Positive divergence right there. The weakness in today's session, it was led by like the banks. It was like JP Morgan, Berkshire Hathaway, Bank of America. It was not our typical culprits, these technology stocks. So yeah, this is great to see. Maybe we end up getting a more durable bounce in the market. And in the after hours, yeah, it's funny. We're recapping today's market, but this after hours move is pretty much erasing today's move in the NASDAQ. Russell 2000, let's see what that one is doing. And this is a function of just incredibly one-sided positioning in the markets team. We do know how everyone's positioned. We know pretty much everyone's in cash now. We know pretty much everyone is in shorts. I'm going to share with you a little story for today's recap. So I was on a Twitter Spaces earlier in the day, and it was pretty funny. The guy that runs the Spaces, really cool guy, and pretty awesome that he brings me on these events. But anyway, so he starts asking for some, audience questions. Like, what are you guys thinking about in the market, whatever. First person that comes on is like someone that it's very obvious this person doesn't really trade all that often. They're kind of new in the game. Maybe they're just like a casual dabbler, casual punter, whatever you want to call it. But she comes on and she's like, excuse me, I have 10 stocks that I want to short. And how do I short these stocks? And for me, that was like, all right, team, sentiment has officially hit peak bearishness. And I was noticing that, like, in all these spaces, everyone on Twitter, like, everyone's just, like, bared up to their eyeballs. And it's, like, a foregone conclusion that now the market has to collapse. And I just think when things get that lopsided, and you can see during your daily and weekend work, just how the positioning looks, like, that's where you can get a really good edge in the market. See, I think a lot of those players are going to end up getting pushed out of their positioning. Not only that, but there's also this group of traders that they're basically saying like, oh yeah, if we get any sort of balance, I'm going to short into it. It's not only that, but I'm sure if we get even just like one good day of price action, there's going to be plenty more shorts that just jump in because they're going, oh my gosh, market's up 1%, an even better short opportunity. So yeah, we'll see what happens for tomorrow. Right now, Russell 2000 is also, we had a bad day today for the Russell, but in the after hours, we're almost, recouping a lot of those losses. And then the Dow Jones up 0.68%. Similar deal over here. Now the dollar index, you definitely have to keep this on your screens for tomorrow. It's going to be crucial. I mean, like this morning, we had the GBP, the British pound, trading like a goddamn penny stock. It was pretty bad. It was like, look at this. Let me see, we'll pull it up. Let's see. And this is, I was looking up these sports betting alternate lines, but look at this. Finviz. I'm not a sports bettor, one of the guys in our group is. Crypto, this was the other divergence. Bitcoin was trading in positive territory the whole day. So was Ethereum. So again, like, there's that urge to just chalk everything up to like, oh yeah, it's the macro, like, you know, it's selling off because of the Fed, like whatever. But I really think we just got into like a liquidation spiral. So I think investors will be surprised that once this bearish seasonality ends, pretty much all of these investment managers have puked up their positions. Has it been a long puke? Yes. Has it been longer than I expected? Yes, certainly. Has it been, you know, violent, scary, whatever? Sure. But once they are done puking, they're done puking. It's been 28 days, for crying out loud. All right, but let's look at these currencies. So we see, yeah, GBP. Look at this. Oh my gosh. Yeah, nice. So the GBP now in this after hour session, it's up 0.79%. That is great. But if I zoom in here, look at what it did. It like cascaded into the abyss. Then there were some talks about intervention, and then it started to come back. Yeah, so for today, all I did was that UUP short. I think for today's video, you know, we're going to keep it as brief as possible. You know, we see what's happening in the market. We have this puke. Hopefully now we get a bit of a bounce. That would be great. I think things for you as an audience member to be looking out for on tomorrow's session is as we get this bounce, if it plays out, first thing you want to look for is the uninversion of the VIX futures curve. Once that gets back in order, then we can say the vol event's behind us. The other thing that you want to look for is the dollar index. If the dollar index starts flipping green tomorrow and it, you know, goes green, oh, now we're in positive territory, oh, it continues to rally, you can basically kiss this bounce goodbye. It's not going to last. But given how overbought the dollar is and the fact that, you know, we're in nice red territory tonight, you know, I think that's a pretty good, at least early indication. So watch VIX futures term structure, watch the dollar index. Those are very, very important. And then the bond market, we've just had like an incredibly violent sell-off in bonds. Like I have 2 trades on in TLT. Maybe these catch a nice, beautiful bounce tomorrow, but this is really like, you know, TLT had been in a downtrend for quite a while, and it was like, oh yeah, it's holding up. And then you just get like the whoosh lower, and today was that whoosh. So yeah, you know, with the bond, a nice bounce in the bond market. And that's really all I would look for. But remember, the bar is very, very low to get a vicious bear market rally here because we know that positioning is so extreme. With that being said, thank you so much for watching the video. You guys are awesome. Thank you so much for all the comments, all the likes on the video. You guys are incredible. And we will see you all tomorrow. Have a good night.